Hey, it's so late in this episode 551 of the Orange Pill Investor. I got my new laptop back from repair, so somebody can let me know, please, if I don't sound like crap. I decided to skip the music. I probably should have just, you know what, let me just do a test run for the share as well. Let's just play any old thing. What do I got queued up? Maybe not that one.
Alright.
Here we go.
Now everybody wants to know the truth about a brother named Quick. I come from a school that's about wicked and the slick. A lot of people
There we
already
go.
know exactly
Let me
where
turn
it's
that
at, cause it's the home of the jackets and the crack.
The first song on that album, we'll save that one for someday when I really don't want to get canceled, or don't mind getting canceled. All right. Hopefully all of that worked. Yesterday was kind of fun. I did a long ass reaction video. Nobody said they hated it, but I don't think I would do anything quite that long unless I just really had to. Maybe short little clips be more fun next time. Every once in a while I show those anyway. But let's just get right into it. It's already 1:30, so there's only a couple more hours left on the market for today anyway. Strategy is running, so that's always fun to see. And let's see, I had just rolled out my Cypher calls. Thanks, Lobby. Appreciate it. Yeah, just it actually, a lot of my stuff was backed up, so I didn't lose files, but like I still had to re-download browsers, re-import all my favorites, and like, it would forget that the browsers were authorized to use the mic and the camera. And so it took me quite a while to get those damn things perfected. So now I'm like kind of nervous that I'll screw something up again. All right, so these decayed a little bit, maybe what, 10%? I've only been open for 9 days, so this is right on schedule. In general, I try to roll these when they're about half of what I sold them for. That generally takes 2 to 3 weeks if the underlying price hasn't moved. If it moves up, then this will decay faster, and I might be able to roll sooner if I choose to. If the price of the underlying stock is going down, then the extrinsic value will probably end up going up more than it's decaying. So in that scenario, I might end up holding it for 3 or 4 weeks, or even until expiration if there was still a good amount of extrinsic value in there and I didn't mind the gamma risk of getting closer to 0 DTE. Let's see, with Tesla, I think it's just hanging around, right? A little up, little down, but mostly kind of down over the last month. So this one is decaying right on time, maybe in another week or two. That'll be ready to roll. As I'm trying to stack some premium, I've been trying to go a little bit longer here. The Tesla long calls are so expensive, though. It was hard to find leaps that were like easily stackable, right? Buying the frickin' 990s would cost $2,700. I was like, all right, the liquidity on Tesla's pretty good, so it's pretty easy to form a debit spread and get some long exposure. So I've just been kind of adding these positions a little bit at a time. Strategy, the weekly aggressive covered calls are getting destroyed. So that's good. That just means that the overall account is doing well. And this is, not financial advice, but this is what you have to be mentally and emotionally prepared for, is that you're going to sell a covered call, sell a covered call, sell a covered call. and then at some point you're going to get wrecked on that. And it just depends on, if strategy runs to 180 like it's looking right now, that's kind of easy to deal with. But if this were to like run to 300 in a week, like that's super painful because you're like, holy shit, I missed out on whatever 50 grand or something of upside just to collect $1,000 in weekly premium. Those events are pretty rare, but you do have to be ready for them when they do happen. And if you can't handle missing out on those wild swings, then this isn't the strategy that you can implement and be able to sleep at night. So for me personally, as bullish as I am on Bitcoin, and then, oh, all right, am I still here? Oh boy, what's up, Ben? I just had some kind of power surge or something, and unfortunately, I think this is what I think this might be the same thing that I actually sent this back for. Let me reshare. That will be annoying as shit. It seemed like this laptop, which I paid a pretty good sum of money for, was overheating, and I was getting some screen freezing. And all right, cool. Appreciate it. Yeah, on my I guess my my headshot is coming back. Who knows? Regardless. So what the hell were we talking about? Oh yeah, you have to be able to stomach, dealing with this. And you'll feel like you're on top of the world when strategy is doing this since December, right? You're just collecting, you're just pocketing money, you're pocketing money, you're pocketing money, and then like, ah, shit, this isn't free money after all, like I thought it was going to be. With Bitcoin, if you're a Bitcoiner, you can just stack a sat and diamond hands it forever, and you really don't need to reduce your cost basis. You can dollar cost average, you can buy at the top forever. It really just doesn't matter if your time horizon is 4 or 5 years into the future. It really just doesn't matter. And you can kind of transfer that philosophy over to these Bitcoin treasury companies. Even as painful as it was buying at the top in November of 2024, if your time horizon is the same as Bitcoin, you can probably just dead man's portfolio it and not really worry about it. You can DCA into it if you want. You can just accidentally buy at the top, feel like shit for a few years, and should win in the end. So you can do those types of things. However, the whole point of option selling is to reduce your cost basis for an increased chance of success. So if we know that Bitcoin is the only sovereign asset, and even though I own, a huge part of my portfolio is in strategy because I think it will outperform Bitcoin over similar time periods, similarly long time periods. There's some portion of stock market risk that you have to attribute to any stock position that you don't attribute to Bitcoin, right? There's no 12-word seed phrase for your strategy shares. The next time we have a presidential election, there could be a hostile administration. any number of different things can crop up for a stock that it does not apply to Bitcoin necessarily. And that makes, like, even though I'm more bullish on the dollar price of strategy even than Bitcoin, I think it's still reasonable to say, you know what, I'm still going to try to reduce my cost basis on all of my stock positions in order to give myself a greater chance of success. Does that inherently limit the max return? Absolutely. So if you're a max return person, then you got to hold spot. You can't be selling covered calls. But if you don't mind taking a little bit of a risk and maybe, the way that I do it is I basically fund my lifestyle through these covered call positions. So the only way that I would be able to just retire off of this account would be the same way that anybody does when they're the portfolio would have to be big enough that you are projecting that it will increase more than your bills per year. And, you could shave off a few shares every month in order to pay your bills. But in my case, I'm kind of just, if I know I've got 10 grand worth of bills to pay, then I sell 10 grand worth of options that month. And however much that limits my portfolio, it just is that's just the nature of the option selling game. So be comfortable with whatever trading philosophy you choose. And you don't really have to choose all or nothing either, right? So 1,100 shares, I sold 5 weeklies and put myself kind of at risk for this upward move. But then I sold 6 at 45 days to expiration, which has a little bit higher of a strike. Now there's more time to get wrecked on this on this position, uh, but there was a little bit more call away value built into this one too. Back when this was trading at whatever 165, I think. So there was $20 worth of call away value built into the 45 DTE positions, and only, I don't know, probably 5% call away value built into the weeklies. But like I was saying, you can employ multiple different types of strategies. You could just say, you know what, I absolutely want maximum upside on half of my shares. I'll sell covered calls on 5 or 600. That's doable. You can just diamond hands through the dips and wait for, and basically it's called bag holding, but you can totally bag hold on any stock position. But for regular TradFi stuff, it's kind of dangerous. Like, let's just, what is Peloton? Like, if Peloton goes up and then goes down, will it ever go back up? Like, I don't know. They could go out of business for all I know. And, or, someone could come out with a better bike, or just anything can disrupt this company. But if a Bitcoin treasury company is built on an asset that can't be disrupted, namely Bitcoin, then I know I can bag hold with confidence. It might take a year, might take a couple of years, but I don't know what the hell is going to happen with Peloton in 2, 3, 4, 5, 10 years. But I know that the Bitcoin on a Bitcoin treasury company's balance sheet will appreciate at least 1x MNAV over long periods of time. And so there's way less bag holding risk on a Bitcoin treasury company than a TradFi position. Even like the monopolies, like Microsoft and Apple. Apple's one that, I mean, they have this huge moat, but as soon as they started issuing dividends, I was like, that company's fucked. There's no way I would invest in a company that is supposed to be creating products, but instead of like, oh, hey, we've got these great ideas, they're like, no, we're just going to return the value. And so I think that offering a dividend in your common is kind of just admitting that you're out of good ideas. The preferreds is another story because the preferred is the product itself, so that's kind of weird. Um, and really, I only use the preferreds as my dry powder. Um, I was stacking a little bit of stretch, but then one, I think, I don't know, stretch was maybe at like 97. And then once it got to 99, 100, whatever, I was like, all right, I'll sell that as my dry powder. And I think SATA was trading, it was still trading at like 93. So I thought, okay, that's got more room to grow. So I went ahead and dumped the stretch for some SATA. And that's done okay so far. That's done nicely. And I don't even really, I know some people want to make sure that they own it before the ex dividend date, but I don't really even pay attention to that. Like if I hold it over ex dividend, great, and I get a couple of bucks or whatever. But I would rather just hold these preferreds instead of cash. Like I know cash is a melting ice cube. At least these preferreds are melting and slower and at least keeping up with inflation to an extent. All right, finished Cipher. I finished? Yeah. So, what to do about this, right? I call it panic rolling. The first time somebody sells us a cover call and just thinks that this is going to be free money forever, they freak the fuck out when when the price of the stock starts getting close to their covered call, let alone when it goes above it. And there's a couple of ways that I try to fight this, and all of them are before the contract is entered. Like there's nothing you can do about this now. There's literally nothing you can do. If I want to close this position, if I want to roll this position, I have to pay 700 and I only got paid 200. So this is a net $500 per contract for me if I touch this right now. So the only way to kind of protect yourself from this is to either have some shares that are not covered, which I don't have, or have some long calls, which are uncovered. Now, all of these long calls, except for the ones in September, basically went to zero in 2025. So I held these to protect my upside in 2025, but they all expired worthless. So, danger to the upside was really not a problem. And I'm kind of assuming that I was a year early or a year late, however the hell you want to look at it, for the next set of all-time highs in Bitcoin and strategy. So I'm pretty much just kind of run this same strategy back this year. And I know hope's not a strategy, but the market is irrational. So I can only hope that it stops being irrational sooner than later. And, like imagining that Bitcoin is going down from here when the Fed has to print like a metric butt ton of dollars is just kind of seems pretty counterintuitive. And the video the video of Jerome Powell like releasing that, it looked more like a hostage video than anything. It was like, okay, blink twice if you need rescued there, Jerome. And he will capitulate. He's talking a lot of shit now. The only thing that I'm wondering is for everyone to save face, and so that they lower the interest rates. Trump wants the interest rates lowered like yesterday. So for him to get what he wants, but for the Fed to also say, well, we're not doing it because he told us to, the market itself has to have some kind of cracks in it. So they have to tank the economy in some fashion. And so that's the only thing that's really got me on edge over the next several months is like, what kind of bullshit games are they going to play to cause panic in the streets, which will give them free reign to just, print money as fast as we kind of expected them to, right? And that just, that lets everybody get what they want and everyone gets to save face. It seems like they'll probably do it, if I had to guess, and this is complete speculation, but they may go ahead and just let the price of silver run and just let banks get liquidated, and then they'll use that as an excuse to print faster and lower rates faster, just inject some liquidity. That kind of seems like that makes sense in a game theory perspective for me. So, we were talking, our last week's episode was the bottom is in, and I think that's largely true, and we're going to have a big year, but they may just decide to play one more little round of fucking games before we get Larry Lepard's big print. So kind of still a little bit nervous about that, but like not enough to keep me out of the market, because maybe it doesn't happen. Maybe we get the gradual print that Lynn Alden was talking about in some of her recent interviews instead of the big print. And maybe they don't have to crash the market. Maybe it just grinds its way up, and that would be fine too. In any case, I'm trying to keep a balance here of having some unlimited upside. But also I need to chip away at this margin use. All right, moving on. Cash secured puts, sold it for 600. I will either close or roll when this is around 300-ish, so another week or two. These poor man's covered calls are not exactly, they're not unlimited upside, so they're still capped at whatever this strike is. But at the same time, it's leveraged. So I'm able to generate more premium per week with less capital than buying 100 shares. So it's like, but as long as it's structured properly, the long call will more than appreciate for whatever I get wrecked on the short call. Like if this pumped to 275, this covered call would get absolutely destroyed for like $6,000. But this long call should go up more than the short call would go down. So up to this strike, it's leveraged, but it's still capped. It's extremely capital efficient. But of course, as you can see, I've had this one open for 120 days, and it's down like $5,000. And there's no way in hell I've captured $5,000 worth of premium on this short call. So if the price of your underlying is going down, your poor man's covered call will lose a ton of money. Like there's, selling these covered calls like chips away at this a little bit. Again, you're reducing your cost basis for an increased chance of success, but that chance of success is not, can never just get to 100%. So fortunately, I've got at least one set of poor man's covered calls that's not done horribly, which I only opened up 2 weeks ago. So strategy hasn't like shit the bed in the last 2 weeks, fortunately. This one is still way down, but plenty of time left. So not terribly worried about that one. But all of these poor man's covered calls can provide some cash if strategy runs to 225 and I have to pay 5 times $5,000, 25,000, then I could just peel off a couple of these poor man's covered calls positions to make up for that difference. So you can keep uncovered shares, you can keep uncovered leaps, You can stash some leverage here and then peel those positions off in order to pay for getting wrecked on these covered calls. But all of these have to be in place before you take this position, not after. Make that a little bigger. Yeah, once you're locked in, you're just riding the elephant at that point. If the underlying goes up, you just there's nothing you can do. You could panic roll, but if strategy crashes $10 a share by Friday, then I'll have rolled for nothing. If this continues to trend up to 200, then yeah, hindsight is 2020, and I should have taken this position off before it ran. But I really try to make no short-term predictions about where stock price will go. A year from now, 5 years from now, I know these numbers should all be up. They should be going up forever, Laura. But in the short term, I generally just try to sell the weeklies or sell the out of the money 45 DTEs and collect premium. All right, this is the IRA. Don't have to worry about any margin here. This is straight cash, homie. And I'm using, let me start. So I'm using Tesla and Strategy as my big stocks to generate premium. And then, so I got paid $1,000 for this one, got paid 400 times 2 for Strategy. So what am I going to do with that $1,800? It's not enough to buy 100 shares of Strategy. It's not enough to buy 100 shares of Tesla, but $1,800 would get me a cash secured put in Cipher. So I could sell a cash secured put at the 18 strike, or the 16 strike 45 days out. That's an efficient use of my capital. But if I've only got, let's see, I sell the 16 strike, that leaves me with 200, left over. Okay, maybe I'll buy two shares of a preferred, just so that my money's doing something. Yeah. I try to keep no actual dry powder in cash. So I've got $27.05 of USD dry powder, and that's by design. And again, I sold the 48 strike. This is at 52. I'm currently missing out on $400 worth of maximum upside. This could run to 75, and I'll just let these shares get called away at 48. That's just the way the ball bounces. If another 2 or 3 weeks go by and the price either comes down or stays at 52, I might be able to roll for a small credit or a break even. Yeah, Tesla's holding steady. Nothing really to do here. Again, I've been adding some debit spreads because the long calls are so cost prohibitive for Tesla. Strategy, I did one debit spread, but the liquidity on their options is kind of poor, at least compared to Tesla. It's extremely liquid compared to many other stocks, but the bid-ask spreads on some of these things for Strategy can get a little bit annoying. All right, so I sold the 190, and this is in the sweet spot for rolling. It's 23 days to expiration, so I'm usually trying to roll by now. But since these are getting threatened, I've actually got $800 worth of extrinsic value. I could just sit and do nothing. But if I try to roll out to 45, I could roll again to 190 for a small credit, or I could try to roll up, give myself a little bit more breathing room, and also for a small credit. I could almost get to the expected move, but kind of can't quite get there. So maybe since this is time to roll and I can do it for a credit, I'll just go ahead and knock that out. That's going to give me another couple of $100 of buying power. So I'll figure out a way to spend that at the end. The Poorman's covered call is not ready to roll. And so you can see I've been stacking a few of these. And with $348, it's like perfect. This is like the perfect position, I guess. I don't have to worry about days to expiration as far as taxes are concerned. If I was worried about exiting this leaps position and getting short-term capital gains taxes or long-term, then I would want to pick something that's like way over 365 days. But in an IRA, really just don't care. So I'm just going to add another one of these positions here. I could have easily picked up, 3 shares of a preferred if I didn't want to do this. But I kind of feel like I'm under leveraged at this point. This is my spending account. I pretty much just put my allowance in here because I really don't spend a whole lot of money. And I'm being a little bit sneaky with the margin use here. It says that I have 2,700 in buying power, and that's not true. I kind of have to keep when I'm selling these cash secured puts in a margin account. I have to keep track of that myself. So really, I think this account's only worth like a couple of grand, but I'm selling cash secured puts on 4 cipher positions, which would be 4 grand, about $6,400, right? If I were to get assigned at 16, and this account's not worth $6,400. So I kind of have to like do my margin use calculations myself. And same thing. I'm using this as the cash generator to pick up some long call positions, Tesla debit spreads, and then however much I can get away with, I've been stacking preferreds. And the margin calculations is like, even though Robinhood would count this full cash secured put against me, Tasty Trade is like running it through some kind of algorithm and only counting like half of this position against me. So it's kind of letting me double dip and buy a few preferred shares. But again, nothing really, this one's just got rolled out yesterday. So nothing to do but sit here and wait. What's up, Buffalo? Hey, what's up, Tony? Yeah, I haven't seen you for a minute. Yep, the 5K account. Thought I was going to turn it back into 5K for a second there, but we held pretty close to 6, even during the worst of Bitcoin's dumping. And I kind of feel like I have a bunch of weird stuff going on. Me and my brother-in-law were able to roll out our Cypher and Wolf cash secured puts. I've been copy trading with him for a few months, and I've tried to be very careful with his trading because he's like super nervous about being in charge of any of his own positions. And we literally have never owned any shares because we've just been able to roll for a credit. And even when like Cypher was, up here, it looked great. Down here, it was like, oh, this kind of sucks. But even here, it was like it didn't stay down long enough for us to like lose any money. Where we were able to actually avoid assignment here by just kind of rolling out and rolling out and rolling out, and really just waiting. And it's just been kind of coming back to life. So that's good. I think it's giving him a little bit of confidence. But I mean, I was kind of hoping his strikes, he would end up getting assigned something. So we've just been basically on step one of the wheel for like months. And so he's been, scalping little premiums here and there. And yeah, but we can't move on to step two of the wheel until we sell a put that actually gets assigned. All right. I got a couple hundred shares or just 100 shares. How many of these do I got? Yeah, one. So my 18 strike is getting breached. So that's cool. We'll see how high that goes by Friday. But again, I'm not going to panic and roll it early and potentially get whipsawed. Whipsawed is like price goes up, you roll your strike, you get screwed because you pay a debit, then the price goes back down, and you'd have been better off just doing nothing. And you go from like panic roll to panic roll and end up losing more money than you actually got paid. So I definitely try to avoid that at all costs. I had just enough cash to sell the 11 strike on CLSK, so I went ahead and added that. And it's not exactly ready to roll yet, so we'll just hang around and see what that does. I really thought I'd be printing money with these Tesla put credit spreads, but I started getting into these right as Tesla was bouncing off of all-time highs. 500 is a nice psychological number. And I thought, okay, if we can just clear 500, then it's blue skies, right? It's price discovery zone. And that has not been happening. So we've been retracing a little bit here, and I've been trying to play this game of rolling these things out without getting wrecked. Yeah, I've got this $5 Strive call for March. This thing's been hanging around for a while, and usually I try to sell them or roll them out when there's 90 days left. But I mean, the damn thing only cost me, what was the average price on? Yeah, it only cost me a nickel, so $5. If this thing dies a noble death and expires worthless, it's not the end of the world. But maybe some miracle could happen, and Bitcoin hits all-time highs again, and maybe this thing could print. So I'm not doing myself any like favors by closing this thing for $2. It's not a big deal. And if any single position does give you heartburn, then it's too big, right? You should just be able to look at any of these positions and think, okay, if I don't win this, it doesn't matter in the long run. I said I don't like the strategy spreads, but I picked up one anyway, just to have some long exposure. And I might have to look and see what it would cost me to just dump all these mining positions and try to get a poor man's covered call going in strategy over the next month or two and see if I can. That would be putting almost all my eggs in one basket. But I'll be keeping an eye on it. If strategy like runs away from me too fast, too quick, then I just won't bother. But I think we got to deal with tariffs again in February. Is Trump going to be meeting with China? So they could be playing their little fucking little standoff games or something too. They could toy with the market price, the entire market, with some of those mind games as well. So some temporary dips might make it easier to get into one of those positions cheaper. Grabbed a few more like way. These are probably, I think these are the farthest leaps available on Strive. So I went and got like some of the Strive 1080s. So that'll be fun to watch over the next year and a half. And then this was just kind of a fun too. I bought a a 2.25 debit spread. I think it cost me like $17. So this is still break even. And then, do I still have my Strive covered calls? I think they expired worthless. So yeah, let's just look at my trade history here. So my average cost on my Strive shares is $1.43. I did get paid a couple of, let's look at my history. So I sold two $1 strikes for last Friday when the price went up to like close to $1. And I got like super lucky. The price closed under $1, so these didn't get called away and I didn't have to pay a roll. So I lowered my cost basis by 7 cents. So from $1.43 to 1.36. And I may just do that every time Strive pumps, then if I get one of these peaks, okay, I'll sell some covered calls, try to avoid losing the shares, and just keep chipping away, collecting a little bit here and there. Like if I had $500 or something, and that was all I could come up with, there's worse cheap stocks to get in on. Now, unfortunately, the reverse merger will, excuse me, not reverse merger, the reverse stock split would drop at 1 to 20. That would drop me down to 10 shares. I wouldn't be able to sell covered calls at that point. So I would have to just hold those shares, hoping that the price goes up, or figure out a way to afford buying another 80 shares. And if the price goes up to $20 a share after a 20 to 1, that would be $1,600. So I might get priced out of Strive in this account if that, when that happens, or, maybe I just hodl the 10 shares or whatever it is. That won't be the end of the world. I try not to hold any positions that I can't just, sell some kind of covered call against. But the good news will be that in my main account, selling options on Strive at $20 a share would be a much easier proposition. It's kind of hard to squeeze premium out of the cheaper names, which is why I try not to trade options on stuff under like $10 a share. Because if it's $10 a share and drops in half, it's $5. You can still kind of get a little something off of $5. But I had some bit farms when it was like $5 a share and it dropped to $2, and it was just like, ugh, I gotta dump this thing. I can't have it dragging down my portfolio. So I'm kind of excited about this reverse split, but at the same time, it'll probably price me out in this small account. So I probably won't be able to trade it in the 5K account, but maybe I'll just start trading some of it in the larger accounts. All right, I think that's it. What's up, NYC? Happy I was staying under 10 Delta short DTE. Yeah, I think a lot of people are. And if that was your strategy while strategy was doing this number, at some point you're like, damn it, I could have collected more premium if I had just sold the 20s or the 30s. But then when it starts to come back to life, it's like, okay, if we get some higher highs and higher lows, now you don't want to be stuck holding some 30 deltas and you just miss out on a ton of upside. Selling covered calls at the bottom is, I guess, worst case scenario, but you really never know when the bottom is, where the bottom is, unless you're a TA god or, the future. All right. I did have some technical difficulties, so I might have to send this damn laptop back, which will be a pain in the ass. I think it glitched out on me again. So if that continues to happen, I can't be having my freaking computer glitching out in the middle of live streams and stuff. So, oh boy, fun times.